The importance of Rich Dad's Guide to Investing. When Robert Kiyosaki released Rich Dad Poor Dad in 1997, it opened the world's eyes to a simple but profound truth. The rich and the poor think differently about money. That book was about mindset. His follow-up, Cash Flow Quadrant, explained the different ways people earn money, whether as employees, self-employed professionals, business owners, or investors. But it is with Rich Dad's Guide to Investing that Kiyosaki dives into the deeper waters of wealth creation, focusing specifically on how the rich invest and why. Why is this book so important? Because while many people know they should invest, few actually understand what investing really means. For most, investing is reduced to casually buying stocks, putting money into retirement accounts, or trusting financial advisors without much personal knowledge. Kiyosaki challenges this limited view. He insists that true investing is not about guessing the stock market, it's about developing financial intelligence, recognizing opportunities, and deliberately building wealth-producing assets. The importance of this book lies in how it demystifies the world of investing. Many assume that investing is reserved for Wall Street insiders, billionaires, or financial geniuses. Kiyosaki disagrees. He explains that investing is a skill anyone can learn if they are willing to educate themselves, think differently, and practice discipline. Just as someone can learn to play an instrument or speak a language, they can learn to become an investor. Another reason this book matters is its focus on the mindset of the rich. While the poor and middle class often approach investing with fear, caution, or dependence on experts, the rich approach it with education, creativity, and confidence. They don't simply hand money over to others. They take control, learn the game, and design investments that align with their vision. Kiyosaki stresses that true investing is not about buying products. It's about building, owning, and controlling assets. The book is also crucial because it bridges the gap between earning money and multiplying money. Many people, even after reading Rich Dad Poor Dad, understand the need to build assets, but remain unsure how to do so in practice. Rich Dad's Guide to Investing addresses that gap by offering principles, examples, and strategies that reveal how investors think, how they evaluate opportunities, and how they turn small beginnings into lasting wealth. Its importance also comes from its practicality. Kiyosaki does not claim to give you hot tips on stocks or the latest trends. Instead, he focuses on timeless principles. Invest in education first. Buy assets that produce cash flow. Minimize liabilities. Use debt wisely. And learn to see opportunities where others see obstacles. These lessons are not tied to a specific time or market. They are universal, adaptable across decades and economies. For the average reader, this book is important because it transforms the idea of investing from something intimidating into something accessible. It tells you that you don't need to be rich to start investing. You need to be financially educated. It shows you that you don't need to predict the market. You need to prepare your mind. It reminds you that investing is not about luck. It is about knowledge, discipline, and vision. In today's world, this message is even more vital. We live in uncertain economic times, with inflation rising, jobs less secure, and traditional retirement plans increasingly unreliable. Simply saving money in a bank or relying on government pensions is no longer enough. People must learn to become investors if they want to achieve financial independence. Rich Dad's Guide to Investing provides a roadmap for that journey. Finally, the book's importance lies in its empowerment. Kiyosaki doesn't just give you fish, he teaches you how to fish. He doesn't want you to follow tips blindly. He wants you to think like an investor, to see the world differently, to spot opportunities others miss. His message is that you can build wealth not because you are lucky, but because you are educated, prepared, and persistent. In short, Rich Dad's Guide to Investing matters because it takes you beyond financial survival and into financial mastery. It answers the critical question: once you understand money, what do you do with it? It teaches you to stop being a consumer, stop being merely a saver, and start becoming a builder of wealth. And in a world where financial ignorance keeps so many trapped, that lesson is priceless. To understand Rich Dad's Guide to Investing, it helps to understand the man who wrote it, Robert Toru Kiyosaki. He is not just an author. He is a teacher, entrepreneur, investor, and storyteller who has dedicated his life to spreading financial education. His own journey from a modest upbringing to global influence reflects the very principles he teaches: early life and the two dads. Robert Kiyosaki was born on April 8, 1947 in Hilo, Hawaii, into a Japanese-American family. His life was profoundly shaped by the influence of two father figures: his biological father, whom he calls his poor dad, and his best friend's father, whom he calls his rich dad. Poor Dad was highly educated, earning a PhD and holding prestigious positions in education. He believed in traditional paths: go to school, get good grades, and secure a stable job. Despite his academic brilliance, Poor Dad struggled financially, living paycheck to paycheck. Rich Dad, on the other hand, had little formal education, but was a successful businessman and investor. He taught Robert practical lessons about money, how to build assets, how to think like an investor, and how to make money work for you. These two contrasting philosophies became the foundation of Kiyosaki's later books. The wisdom of Rich Dad contrasted with the struggles of Poor Dad gave him a unique perspective on wealth and financial freedom, military service, and early career. After graduating from the U.S. Merchant Marine Academy, Robert joined the Marine Corps and served as a helicopter gunship pilot during the Vietnam War. His military service instilled discipline, courage, and leadership qualities that would serve him well later in business and investing. Following his service, he entered the corporate world, working for Xerox. But he quickly realized that the security of a paycheck did not align with his entrepreneurial spirit. He wanted freedom, not dependency. This realization led him to pursue business ventures. Failures and lessons learned. Kiyosaki's early businesses were not all successes. In the 1970s, he launched a company selling nylon and Velcro surfer wallets. Though initially popular, the business collapsed under competition and poor management. Later, he started an apparel company producing licensed t-shirts for rock bands, another venture that ultimately failed. Instead of discouraging him, these failures became part of his education. Rich Dad had taught him that mistakes are not the end, but the beginning of learning. Kiyosaki used these experiences to refine his understanding of entrepreneurship and investing. His failures gave him the credibility to speak not just from theory, but from the trenches of real business. Turning point: real estate and investing. Kiyosaki eventually found success through real estate investing in small businesses. He discovered that wealth was not about working harder for a paycheck, but about acquiring assets that generate passive income. Rental properties, investments, and businesses became his stepping stones to financial freedom. This was when he began to embody Rich Dad's philosophy. True wealth comes not from job security, but from financial intelligence and control over your money. Author, educator, and global influence. In 1997, Kiyosaki published Rich Dad, Poor Dad, a book that would change the financial world. Initially self-published, it spread rapidly through word of mouth, eventually becoming a global bestseller. It challenged conventional beliefs about money and introduced millions to the importance of financial literacy. He followed it with Cash Flow Quadrant, explaining the 4 ways people earn money: employee, self-employed, business owner, investor. Finally, he released Rich Dad's Guide to Investing, which focused specifically on how the rich approach investing differently from everyone else. Alongside his books, Kiyosaki developed the board game Cash Flow, designed to teach financial education in an interactive way. His seminars, courses, and online programs have reached audiences worldwide. He has become one of the most influential financial educators of the modern era. Philosophy of Wealth and Investing. Robert Kiyosaki's philosophy can be summarized in a few key points. Financial education is essential. Schools don't teach money, yet money affects every aspect of life. Without financial literacy, people remain trapped in the rat race. Assets versus liabilities. The rich acquire assets, things that put money in your pocket, while the poor and middle class accumulate liabilities, things that take money out. Cash flow matters more than income. High salaries don't guarantee wealth. Consistent cash flow from investments does. Entrepreneurship and investing are keys to freedom. Jobs provide security, but business and investments provide independence. Risk and failure are teachers. The path to success includes mistakes. Avoiding failure guarantees mediocrity. The rich invest differently. They don't rely on savings or mutual funds alone. They create opportunities, use tax advantages, and control their investments. A voice for the future. Kiyosaki is also known for his outspoken views on the global economy, government policies, and traditional financial advice. He often warns that relying on pensions, Social Security, or savings is dangerous in a changing world. He advocates for individuals to take control of their financial destiny through education, entrepreneurship, and smart investing. Why his story matters for investors. Robert Kiyosaki's story matters because he practices what he teaches. He wasn't born into wealth. He failed multiple times. He questioned conventional wisdom. And through persistence and education, he achieved financial freedom. This is why Rich Dad's Guide to Investing is more than theory. It's the distilled wisdom of someone who has lived both sides: failure and success, dependency and freedom. His life proves that anyone, regardless of background, can learn to invest, build assets, and achieve independence. Every book Robert Kiyosaki has written has had a specific mission. Rich Dad, Poor Dad was about shifting your mindset. Cash Flow Quadrant was about understanding how people earn money differently. Rich Dad's Guide to Investing takes the next step. It is about teaching readers how to think like an investor, how to build wealth strategically, and how to prepare for opportunities long before they appear. This book's purpose can be summed up in 3 themes: to educate, to empower, and to prepare. 1. Educating. Beyond basic investing. Many people think they are investing simply because they put money into retirement accounts, buy mutual funds, or follow advice from brokers. Kiyosaki's purpose was to show that this is not true investing. It is passive, uninformed, and often limited in return. His book aims to educate readers about the difference between amateur investing and professional investing. Amateurs focus on products, stocks, bonds, mutual funds. Professionals focus on opportunities, cash flow, tax advantages, and control. Kiyosaki wanted readers to understand that investing is not about luck, it's about knowledge. The book teaches concepts like the difference between being a small investor and being an insider, how the rich legally minimize taxes through investment structures, why financial education is the ultimate investment before any dollar is spent. 2. Empowering ordinary people. Another purpose of the book is empowerment. Kiyosaki stresses that you don't need to be rich to start investing. You need to be educated. He wanted to break the myth that investing is reserved for Wall Street professionals or the wealthy elite. He insists that anyone can become an investor by starting small, practicing discipline, and continuously learning. His book is filled with encouragement for readers to take charge of their financial future. Instead of handing over control to financial advisors, governments, or employers. By teaching the philosophy of Rich Dad, Kiyosaki empowers ordinary people to think like the rich. Instead of fearing risk, they can learn to manage it. Instead of saving endlessly, they can learn to grow money strategically. Instead of depending on pensions or Social Security, they can build independence. 3. Preparing for the future. A key purpose of Rich Dad's Guide to Investing is preparation. Kiyosaki often says that the best investors don't wait for opportunities, they prepare their minds, skills, and finances so they are ready when opportunities appear. This preparation includes strengthening financial education, developing the discipline to save and invest consistently, building networks and teams to spot and evaluate opportunities, practicing small investments to build confidence for larger ones, Kiyosaki wanted readers to understand that success is not about chasing quick wins, but about positioning yourself for long-term opportunities. In a changing world where jobs are unstable, economies shift, and technologies disrupt, this preparation is essential. 4. Shifting the definition of investor. Another purpose of the book is to challenge the way society defines an investor. Most people assume investors are those who put money into stocks or funds. But Kiyosaki explains that true investors are creators and builders. They build businesses. They acquire real estate that produces income. They create products or intellectual property. They design strategies to maximize wealth and minimize liabilities. By redefining what it means to be an investor, Kiyosaki invites readers to see themselves not as passive participants, but as active creators of wealth. 5. Bridging mindset and mechanics. The earlier books in the Rich Dad series focus heavily on mindset. Rich Dad's Guide to Investing bridges mindset with mechanics. Its purpose is to move readers from theory to practice, showing not just why to invest, but how. It provides insight into the stages of becoming an investor, starting small, learning, and scaling up. The importance of creating a plan and sticking to it. How to evaluate investments beyond surface-level numbers. This makes the book practical, not just philosophical. 6. Inspiring a lifetime journey. Finally, the purpose of the book is to inspire a lifelong journey. Kiyosaki does not present investing as a quick fix or one-time activity. He presents it as a way of life, a continuous process of learning, practicing, failing, and growing. He wants readers to see that investing is not a destination, but a discipline. It is about developing habits and thinking patterns that will serve them for decades. In short, the purpose of Rich Dad's Guide to Investing is to educate readers about real investing versus passive saving, empower ordinary people to think and act like rich investors, prepare individuals to spot and seize opportunities, redefine what it means to be an investor, not a gambler, but a builder, inspire a lifelong journey of financial growth and independence. Robert Kiyosaki didn't write this book to give you stock tips or quick wins. He wrote it to change your perspective on investing forever. His mission was to teach people that wealth is not about luck, but about preparation, education, and discipline. The key lessons, how to apply them, and real-life illustrations. 1. There are 3 types of investors. The lesson. Kiyosaki categorizes investors into 3 types. Accredited investors, wealthy individuals with money to invest. Sophisticated investors, people with strong financial education who understand and analyze opportunities. Inside investors, those who create opportunities by building businesses or assets. The majority of people never move beyond the first type they invest only because they have money, but the real wealth is built by sophisticated and inside investors. How to apply? Don't stop at just having money to invest. Work on financial education. Learn to evaluate opportunities critically. Consider building or co-creating businesses or real estate deals instead of being only a passive investor. Illustration. Elon Musk is an inside investor. He didn't just buy stocks. He built companies like Tesla and SpaceX. By creating the investment itself, he multiplied his wealth exponentially. 2. The rich create investments. The lesson. Most people wait for investment products to be offered to them: stocks, funds, insurance. The rich, however, create investments. They build companies, design real estate projects, or invent products. This allows them to control risk, maximize return, and capture value before the masses even see the opportunity. How to apply? Ask, what can I create that others would invest in? Start small. Perhaps a rental property, an online business, or a product idea. Collaborate with others to develop investments instead of only buying them. Illustration. Think of Mark Zuckerberg. He didn't wait for a stockbroker to offer him Facebook stock. He created Facebook. Later, millions invested in his vision. That's the essence of creating investments. 3. Invest in your financial education. First, the lesson. Kiyosaki emphasizes that the best investment is not a stock, bond, or property. It's your financial education. Without knowledge, even a lucky win in investing will not last. With education, you can recover from losses and spot opportunities everywhere. How to apply. Dedicate time and money to learning books, courses, mentors, seminars, play the cash flow board game, or use simulations to practice. Read financial statements regularly and learn to analyze them. Illustration. Warren Buffett spends about 80% of his day reading and learning. His investments succeed not because of luck, but because of decades of disciplined financial education. 4. Start small, but start. The lesson. Many people hesitate to invest because they feel they don't have enough money. Kiyosaki teaches that the key is not the amount, but the discipline. Start small, learn, make mistakes, and grow. How to apply. Begin with micro-investment stocks, crowdfunding, or small real estate deals. Treat mistakes as tuition. Record what you learn. Commit to consistent action rather than waiting for the perfect time. Illustration. Kiyosaki himself began with small rental properties. Over time, he scaled up to larger investments. What mattered was not the size, but the start. 5. Know the difference between good debt and bad debt. The lesson. Poor dad saw all debt as dangerous. Rich dad saw debt as a tool. When used wisely, it can accelerate wealth building. Bad debt. Borrowing to buy liabilities, cars, vacations, consumer goods. Good debt. Borrowing to acquire assets that generate income, real estate, businesses. How to apply. Avoid using debt for consumption. Use debt strategically to leverage investments that produce cash flow. Educate yourself on interest rates, tax advantages, and risk management. Illustration. Most billion-dollar real estate projects are funded through good debt. Developers borrow, build income-generating properties, and use rental income to repay the loan while keeping the asset. 6. The rich focus on cash flow, not capital gains. The lesson. Many amateur investors chase capital gains. They buy low, hope prices go up, and sell high. The rich focus instead on cash flow, steady income that continues regardless of market swings. How to apply. Prioritize investments that generate regular income, rent, dividends, royalties. Avoid speculative investing based only on price appreciation. Ask before investing. Will this give me monthly cash flow? Illustration. Robert Kiyosaki invests heavily in rental properties. While property values fluctuate, his tenants' rent provides steady cash flow month after month. 7. Prepare before opportunities come. The lesson. The average person waits until an opportunity appears, then scrambles for money, skills, or courage. By then, it's often too late. The rich prepare in advance, building knowledge, saving capital, and creating networks so they can seize opportunities immediately. How to apply. Keep an opportunity fund, money set aside for investments. Stay educated so you recognize opportunities quickly. Build relationships with mentors, investors, and partners. Illustration. During the 2008 financial crisis, many people panicked, but prepared investors bought properties at bargain prices and built fortunes. They were ready, while others were frozen by fear. 8. Work with teams, not alone. The lesson. Rich Dad taught that investing is a team sport. The wealthy surround themselves with advisors, accountants, attorneys, brokers, partners who help evaluate and manage opportunities. How to apply. Don't try to do everything yourself. Build a financial team. Network with people smarter than you in specific areas. Be humble enough to ask questions and seek advice. Illustration. Every successful entrepreneur has a team. For example, Richard Branson built the Virgin Group by leveraging the expertise of specialists across industries, not by trying to know everything himself. 9. Overcoming fear and doubt. The lesson. Fear of losing money is the #1 obstacle to investing. Rich Dad taught that everyone feels fear, but the rich act despite it. Instead of avoiding risk, they learn to manage it. How to apply. Start small to reduce risk and build confidence. Reframe mistakes as feedback. Surround yourself with supportive, like-minded people. Illustration. Kiyosaki often recalls his first real estate investment. He was afraid, uncertain, and inexperienced, but he acted anyway, and that decision became the foundation for his financial freedom. 10. Think long-term. The lesson. Amateur investors seek quick wins. Professional investors think decades ahead. Rich Dad taught that wealth is built through patience, compounding, and consistent discipline. How to apply. Set long-term goals 10 to 20 years. Reinvest cash flow into new assets. Resist the temptation of short-term speculation. Illustration. Jeff Bezos built Amazon with a long-term vision, often sacrificing short-term profits for future dominance. His patience created one of the world's most valuable companies. Pulling it all together. The lessons of Rich Dad's Guide to Investing are not about quick tricks. They are about mindset, preparation, and discipline. The rich create investments, not just buy them. They focus on cash flow, not speculation. They use debt wisely, build teams, and prepare before opportunities arise. Above all, they invest in financial education first. For everyday readers, the message is clear. You don't need to be rich to start investing, but you do need to start thinking and acting like an investor. By shifting mindset, practicing discipline, and taking small but consistent steps, anyone can move from financial survival to financial freedom. When you finish Robert Kiyosaki's Rich Dad's Guide to Investing, you realize that it is not just a book about stocks, bonds, or real estate. It is a book about becoming the kind of person who sees, creates, and seizes opportunities. The book's ultimate takeaway is this: the rich invest differently, not because they have more money, but because they have more financial education, more discipline, and more courage. The core takeaway. The poor and middle class often see investing as risky, intimidating, or reserved for others. They rely on traditional paths, jobs, savings, pensions, and hope it will be enough. The rich, however, think differently. They invest in their own education before anything else. Create and control investments instead of waiting for products. Focus on cash flow, not speculation. Use teams and preparation to manage risk. This mindset shift is the heart of the book. It teaches that investing is not about luck or insider tips. It is about being prepared, disciplined, and informed. Why it still matters today. In today's world, the purpose of this book is more urgent than ever. Economies are uncertain. Jobs are less secure. Inflation and technology are reshaping the financial landscape. Relying on traditional methods of saving or retirement planning is no longer enough. This book reminds us that simply working hard is not enough. You must make your money work harder. Relying solely on financial advisors can be dangerous. You must take ownership of your financial education. Opportunities will come, but only those who are prepared will seize them. It is a timeless reminder that your financial future is not written by governments, employers, or luck. It is written by your mindset and choices. Living the principles. Imagine how your life would look if you applied even a fraction of the lessons from this book. You start small with your first investment, building confidence with every step. You build a circle of advisors and mentors who guide you. You stop fearing debt and instead learn to use it strategically. You see opportunities others overlook because you've trained your mind to think differently. You create investments, whether a small business, a rental property, or an intellectual property that generate cash flow for years to come. At that point, you're no longer just surviving. The bigger picture of investing. Kiyosaki insists that investing is not about money alone. It's about freedom and impact. Freedom to spend time with loved ones instead of being chained to a job. Freedom to pursue passions without worrying about bills. Freedom to give generously and make a difference in the world. Money is not the goal, it's the tool. The true purpose of investing is to live a life of choice, contribution, and purpose. Stories that inspire. History is full of people who lived these principles. Entrepreneurs like Steve Jobs or Elon Musk, who didn't just invest in companies, they built them. Everyday investors who bought small rental properties, built passive income, and retired early. Innovators who created intellectual property books, music, inventions that generated cash flow for decades. These stories prove that investing is not limited to the elite. It is available to anyone willing to learn, act, and persist. Your invitation. The purpose of reading this book is not to admire Rich Dad's wisdom. It is to live it. The invitation is clear. Don't wait until you're rich to start investing. Don't depend solely on financial advisors or pensions. Don't let fear, doubt, or cynicism keep you trapped. Instead, ask yourself, what am I doing today to build assets? Am I preparing myself to see and seize opportunities? Am I letting money control me? Or am I learning to control money? Your answers will shape your future. You don't need millions to begin. You only need courage to start, humility to learn, and discipline to persist. You were not born to live paycheck to paycheck. You were not born to hand over your financial future to chance or to others. You were born to build, to create, to live free. So take the first step today. Learn, practice, and grow. Build your financial intelligence as if your life depends on it, because it does. Because the truth is simple. The rich don't wait for opportunities, they prepare, they create, and they invest. If this message inspired you, don't let it end here. Subscribe to Awaken Greatness for more life-changing lessons from the world's most powerful books. And I'd love to hear from you. What kind of investor do you want to become? An amateur who waits, or a professional who prepares? Share your answer in the comments. You might inspire someone else to begin their journey. This is your time. This is your opportunity. Welcome to Awaken Greatness.